7:59 now. Let me know when. All right. Good morning. It's 7:59, and this is the early edition, 1 minute early, of the Gold Fix. And I'm Vince Lanci. We're going to look at a little bit of Twitter. Actually, we have about a minute before we start. So before we start, we'll just talk about. I want to talk a little bit editorially about the Venezuela quote coup end quote. In 2002, the United States was happily backing a coup. It literally was a coup on Hugo Chavez, and oil prices dropped then. I remember trading during that time, thinking the oil prices should go up, but I'm bullish on everything all the time. And oil prices did drop between April 9th and April 13th, 2002. And the reason I learned later was because a change in power in a country like Venezuela, where the new leader is U.S. approved, would be bad for OPEC. And that would be a break in OPEC, considering that Venezuela, I think, might be the largest producer of oil or put it this way, they are one of the largest suppliers to the U.S., which I'll come back to on that. If you're joining us now, we're just having a little quick editorial conversation about oil and the Venezuelan situation. Here's the thing. In 2002, when the coup failed rather quickly, it failed because when you're a dictatorial government or regime, you control the oil. And when you control the oil, you control the military. And by that, I mean, and I'm not making this up, Chavez basically paid military generals back in the day with tankers. So you got a tanker of oil on the ocean. It's about to be sold somewhere. And he says, hey, tanker number one, that's for general number one, the proceeds from that. How do I know this? Let's just say that I have been asked and refused to help at least a broker in the Cayman Islands asked me to help track down some U.S. bonds in the U.S. that were bought with proceeds from Venezuelan oil tankers, and they were custodial accounts for Venezuelan generals. This was 2 years ago. I said, no, you're nuts. And I reported it to I'm not sure what agency I reported it to, but I have the guy's card still, and they really didn't care. Anyway, that's just a fact. When you're a dictator, what you have at your disposal, and you have oil at your disposal, you will use it to buy the general's loyalty. And in 2002, that worked very well for Chavez. The difference between 2002 and today is the following. The U.S. recognized, and forgive me if I can't say the guy's name, but it's Guaido. We'll just call him Juan for this conversation. The U.S. quickly recognized this Yuan is Chinese, right? Juan's status as interim president. When let's look at this. The guy wasn't even elected. Who are we to do that? But nevertheless, it gained traction as other countries in Latin America followed suit. I know that Brazil did, and several others did. And the reason this is different than in 2002, and importantly different, is, as I put oil on the screen, even though oil doesn't seem to care, is that if you have that kind of cadre of countries that is growing in recognizing this interim president guy named Juan, even though Maduro still controls the oil industry and the military, you have a setup for sanctions. And if you have sanctions and you disrupt the oil flow out of Venezuela, of course you crush Venezuela, and you'll probably crush Maduro eventually. But you set the case for higher oil prices. Number one. Number two, most importantly, as a U.S. consumer, much of our refined products are from using Venezuelan heavier oil. We import about 800,000 barrels of their oil, and I looked this up, and let me find. It was a great little. There's a really sharp person out there. I should have saved what she said, but basically, I think it's 800,000 barrels daily. I might have my my metrics totally off. But the bottom line is, much of our refined products come from Venezuela, and it's a little bit heavier oil. And uh, Venezuela's a boycott or sanctions on Venezuela would drive the price of oil up. So what probably scared the crap out of OPEC yesterday might make them happy if we do have sanctions. Simultaneously, look for prices of heating oil and/or gasoline to go up if that were to happen. But that's it for the oil editorial. Let's move on to gold, as this is the gold fix. Okay, spot gold is trading 1279, down from yesterday's close. Silver is trading under 1530 at 1527, 1528. Also down a little more than, let's say, about a nickel per ounce. The US dollar is broadly stronger, most notably against the EURO. And that is a little side note there, a little footnote. The euro typically is weaker, gets weaker almost every time the ECB is met. The euro gets weaker going into that in anticipation of dovish statements. So in yesterday's trading, gold was mixed between support just above 1276, which we've mentioned many times, and 1285, which apparently is some sort of important number now. I didn't have it, but I guess it is. There were two events of note, as we were just discussing. The U.S. And a growing number of countries are recognizing Juan Guaido as the interim president. This is largely seen as a coup, and if successfully executed, it will be bearish for oil, as it was in 2002, when Chavez was briefly a coup victim, for lack of a better word. I went through the differences, but basically the difference between 2002's coup and now is that while Maduro retains control of oil and the military, like Chavez did then, the number of countries backing the interim dude, Juan, gives grounds for sanctions. This would have the opposite effect on oil as a coup would hope to have. The ECB meets again today. And as I said, in almost every ECB meeting, the euro is weaker, and it did drop pretty harshly yesterday. I don't have it on the screen right now. I want to keep gold up there. So it may soften a little bit more, but it looks like the market may have, and this is my opinion, the market may be getting ahead of itself and discounting the euro's sell-off historically. If you're a time series algorithm, you're selling the euro going into an ECB meeting. No different than, say, hat tip to Tracy. If you're a time series SOMA algorithm, you're buying the dollar going into a SOMA meeting. So here's something that I think is more important for gold, although it doesn't show up in the market yet. The government shutdown will likely not end, as if you didn't know that already, as there are two deals out there submitted, one by the right, one by the left, one by the Dems, one by the GOP, however you want to call it. They're very far apart. Now, in one sentence, it is my opinion that the presidential administration's deal is basically a false deal. They're just basically throwing it out there just to save face. Whereas the deal submitted by the left allocates money that could pretty much finance a wall for border protection, but doesn't allocate that money towards the wall. So it's a bunch of crap from both sides. But the Trump administration, and this is where gold comes into it, the Trump administration has begun requesting data on what a protracted short-term shutdown would do to industry. So this is likely what I would call an intentional bleed, meaning showing your cards the other hand to the Dems. This is I believe it's beginning to have a cancerous effect on the U.S. dollar, even though the dollar is stronger today, and puts gold on our radar for an event-driven spike. I mean, in the past, we've seen gold rally on shutdowns or rumors of shutdowns only to get crushed. Now we're looking at a shutdown that's over 30 days and gold doing nothing. I mean, chronic, as we've mentioned, the AM roadmap, and Larry has pointed out, after it's out of the headlines, chronic problems don't seem to cause market movement. It's a form of mass denial, I think, psychology of the markets. So I think when you look at the dollar and when you look at bonds, at the rising rhetoric that we might be downgraded as a nation, although I think that's not likely to happen. Uh, in fact, it did happen before and didn't really do much to the market, but that's going to have some sort of effect on the dollar. And it has the dollar strong, no doubt, but it has probably kept it down in light of the fact that we are in a QT situation. Bad news remains to be bad. Um, Data today includes weekly jobless claims at 8:30, and the market, MARKIT, that company's PMI, they call it a flash PMI at 9:45. Earnings today are Starbucks, Intel, and several airlines. Intel will probably be interesting to watch. Starbucks, if you're looking for an anti-recessionary company, and airlines. I particularly enjoy looking at the airlines, especially Southwest, as they are aggressive hedgers of oil risk, and it has served them well in the past. I like to see how Southwest does. If you look at the orange list on the screen, we have the dollar up about 30 basis points. Gold versus the yuan down 21 yuan. Don't freak out about that. Gold futures trading about 1279 and a half. That's a delayed quote. I'm giving you gold spot. Gold futures and spot February contract are the same. Silver hovering under 1530, and we have the S&P on a delayed quote up a little bit. Stocks across the board are mixed, I would say at best. The VIX is unchanged. Oil is flat. These are all things that are on our radar today or of interest to us. Natural gas, a little bit of bounce, and we have on our radar today. Why don't we put that up? But we're going to talk about gold mostly. But let's just put this up here for the moment. Okay, we have on our radar today. Well, yesterday we traded. Since we're talking about trading, yesterday at the end of the day we traded the SPY. We had a small loss on that. Gold did not give us a 4-hour signal. Natural gas gave us a good signal, and we didn't trade it foolishly. Tomorrow, this was written yesterday. We have 1285, 1278. Those are our levels. You can trade it as a range, or you can trade it as a breakout. We prefer trading breakouts, but we have stops involved. We're very close to triggering a trade in gold. Silver, below 1230, I'm bearish only because I know that there's used to be physical demand there, but there's really not close. 1520 to 1539 levels there. Bitcoin actually 3590 to 3497, hovering. I should have it up there. 3590 to 3497. We were hovering in the 3497 area yesterday, but we've bounced off of that since. The Dow 24,390, 24,109, 24,680. Wells Fargo, that's the wrong symbol for Wells Fargo. The Wells Fargo Corp is trading 50 and change. We're closed at 5012, 5019 to 4962. That's actually close to possible break higher. Apple, always a favorite, but for trading, actually has a pretty tight 4-hour setup. 156 and change, as you can see on your screen, to 150 spot 89. Before we go any further into the technicals, I want to talk about the gold market right now. Now, if you look, you see several blue lines that I put up there. One of the blue lines, the one that's closest to where the market is now, is a replication of the line that I had before. They were dotted yellow, but the yellow was just driving me crazy. The other lines are put there just to show with a little bit more emphasis on how markets behave in different environments. If you look at this blue line here going parallel, the market, we'll call these speed lines, which really it's slope lines that go up, give you an idea of different market personalities. The market's trading sideways, that's flat. And then the market starts to go up. You have what's basically a little bit under a 45-degree angle. Then the market slope steepens here, and you have, I don't know, a little bit above 45-degree angle. And then on the daily, you have a market slope that goes, I don't know, 75 degrees, and then sideways again, back down to the, I don't know, call it a 50-degree angle. So what you have is you have a market that, steepness can't be sustained. Doesn't mean it has to go through sideways. It could be a gap higher and lower. But that's why I put those other blue lines there. They don't really matter to me except for this one. This line matters to me because we're closest to it. And if you are trading actively, You don't have to swear by my line. You can draw lines for different areas, but just know that people have lines in this area. And you'll see when we dovetail into the technicals why I like this line. It happens to coincide with Michael Moore's numbers in gold today. But here we are on the cusp right now of a 4 hour signal, but we do not have one. Draw your attention to the bottom. You have an oval or an ellipse, whatever you want to call it. At the bottom there, that gives us criteria to be short when the Bollinger Bands widen. This is a 1.5 wide Bollinger Band setup. And this is a VBS trade potentially. If you like trading the ranges, you should probably be long right now with a 1278 and change or a little bit lower stop, looking for a rally as high as 1285. Look at, we have been trading the range for the last 3 days. Looking at that 4 hour chart, if you traded that ping pong, you would have made it some money, or pinball, I should say. But a close below 1278, spot 58 in spot, which is basically February contract now, would give us a signal to be short. And we would hope that the market does that, not in the first hour, but later on. And I'll show you why. Here's the first hour. Here's the 1 hour. If I can get rid of all this stuff here. All right. We have been, I'm not sure why the line does what it does here, but it renders differently. It might be where my system is set up. But we have nothing on the hourly, but we are hovering in this line area. I don't want to make this line too important, but I do want to say, take a look at this. If you're looking at channels, right, you have a market that traded in a range for, it's a 4 hour area, right? Rejected it. You have a channel above and now is back in it. So the question is, does it remain below 1281, right, which is kind of like the top of the channel, and inside the 1281 and 1276 area, or does it reject this channel quickly again? I am biased that it will reject it lower, and I'm only biased because that gives me a trade to do. I'd be more than happy to have it rejected higher at 1288, roughly, which is my area, but it doesn't seem to be the case at the moment. But the system is what the system is. I won't trade it unless it's above that. The reason I say 1288 as opposed to 1285, which was on my radar level, I think, is because between 1285 and 1288, I think is kind of a dead zone. But I will get long on a 4 hour closed bar penetration above 1285 and a half, almost definitely. Uh, Keep in mind, I am predicting that if the market does go above that on a 4 hour close, or conversely below 12 at 78.83, you will see the Bollinger Bands widen. And right now, the bottom one is widening a bit. The top one is flat, but there will be a widening. And the widening, when that does happen, indicates that you go with the direction of the midline or the red line. So if, to just get right to the point here, if we put on a trade, I have a concern about it, and that's that blue line. The market comes in and closes on a 4 hour basis, say at 1277. The system says for me to get short, and I will do that. But frankly, I would probably put on half the position that I normally would, because I do recognize this 1276 area as important. That said, below 1276, I might double down with the stop area being in the 1278, 1279 area, looking to risk one to make two. The stop level would be generated before the target level will be generated. I think the market below 1276 can easily hit 1267 and then possibly 1261. This other blue lines we should just ignore now. So why don't we just ignore those for the moment? All right, silver is a different animal. If you look at the silver market, on the 4 hour basis, it's stronger within the Bollinger Bands on the VBS system. And that to me is a sign that we might be seeing a slight reversal in the gold silver ratio, which a lot of people look at. I don't particularly trade it, but I do note that people do. Last time we were in the 1530 area months ago, there was a lot of physical buying at 1530 coming out of Asia. There was also a player or two buying silver and selling gold. They got their faces ripped off, but here we are back at that level, and maybe someone's putting that trade on again. I'm suspicious of the market below 1530, and I'm suspicious. I'm bullish above 1530, which means I'm nowhere until the market says we're above 1539 basis spot or below 1522. The spot market in silver is not tied to the futures market right now, as the spot market would be at Feb expiration and March futures are more active. Uh, uh, so we will be expressing trades in March futures based on spot, and I would give those levels in the chat room. And if I did that on Twitter, it would be after the fact. It would not be in real time. So you can look at it that way. Let's look at the technicals before we look at what else is in the markets. All right. Okay, the first thing I want to draw you to is where it says upside get low on decent penetration above 1282 spot 60. That's a typo. I think Michael's numbers are valid. That's probably a support number now, not so much a resistance number. So I just put a little red line through that. I hope he's not offended. I think what he's trying to say, or what he really is saying, is get long on a penetration above 1285 or 85.10. That was a number I think he had a day or two ago. So I'm going to change his numbers today, all right, because of this typo kind of throwing me off a little bit. I would say his range is 1285 to 1279 as an opening range. I would say a real range to trade, if you're trading the ranges, I mean, that's a $3 range. Who wants to play that, right? Would be 1288 to 1276. Those would be my ranges to look at. And if you look on the left-hand side, the highlighted numbers are numbers that I believe are very important, and the numbers with red around them are the numbers that I'm basing my opening range on. The reason I'm basing my opening also does coincide. Sorry for the interruption. It also does coincide with the 4-hour Bollinger Band. Bear in mind, anyone who trades does what I call ocular regression, meaning we see what we want to see. And I'm no stranger to that, and I'm guilty as the rest of us. So while I'm looking at technical numbers that coincide with my Bollinger Band or volatility-based trending system, the volatility-based trending system does keep me honest as well. So I would say, again, in gold, I'd be a seller below 1276, almost definitely, depending on what time of the hour it does. And I would be looking to be long above 1288 with some resistance above at 1291, 1292. And above that, we could run to 1300. The reason I give these upside numbers today is because, at some point, the dollar is going to take a hitter. Minus the S implied. And I think when that does happen, it could be an event that triggers the shutdown is going to last 6 months. I mean, how can that be bullish for the dollar? That just puts a fork in Powell's QT, especially with the stock market. Stock market, if the S&P touches 2,200, I don't see how he can ignore that in his calculus. Let's look at the other markets that we have on our radar, starting at the bottom, actually. Love, that is Southwest Airlines. As I said, I like that. They have earnings out today. Looking at the hourly, it probably should be flatlining. That's flatlining. I have no love there. Nothing to give, nothing to generate there as an idea. Intel might be interesting, considering their past relationship with IBM. Starbucks, although I don't have anything to give you there, Starbucks, I have nothing apparent to show you there. You've seen the numbers on the other markets we'll be looking at, and those are working our way up. Wells Fargo, depending on where the market comes in today, depending on where the stocks open, the actual stocks open, to paraphrase Larry, I will be looking to do something. We will be looking to do something on the VBS system there with an eye to the upside, since we worked closer there before. But it's pretty tight. Something's going to happen there. Bitcoin, I think it's a great product to trade. I also think it's a great technology, and I'm going to start trading it more since it moves so much. Apple, you see the levels there. Natural gas, I put up there for just to remind myself, 2 times in a row I have missed signals, so I'm going to start paying attention to it. And that the third time I get a signal will be the one that I'm stopped out. Regardless, we're in the winter season. We're in the active season. It should be traded. If you're an active trader, it should at least be watched. It is coiling for another move, although I wouldn't say to do anything right now. I would say uh, above 307 and change, consider being long. Below 299, consider being short the front most liquid month. Do not play this in deferred months. This is a seasonal contract with a term structure that mirrors a sine curve like a weather pattern. Anyone out there who trades soybeans also knows what I mean. Heating oil, gasoline, et cetera, et cetera. Okay. That's basically it. So look for trade alerts in the chat, and stay with us at 8:30. Uh, we'll be on the AM Robap. Uh, Mike Aronovitz and myself will be co-hosting that. 8:30. We have weekly jobless claims. The number 218,000 comes to mind, but I'm 218 beta 222 on whatever the number's supposed to be. I'm not really sure it'll have much of an effect. Uh, Unfortunately, the stock market, the broad indices, which I do like to trade, are tightening, but not giving me anything to do. I would not trade the ES or the SPY in the first hour, as it stopped me out yesterday, and that's a lesson to learn. Have a great day. Look for me in the chat, as well as Larry and the other people on the team. Hat tip to Bryn Kelly for her natural gas commentary the last couple of days, and Tracy Schuchart for her always